NIO stock has gained more than 100% in the last month and is up over 1,300% in the last 6 months. Now, the Chinese EV stocks are starting to cool off a bit, and many people are wondering what they should do now. So in today's video, I'm going to break down exactly what is going on with NIO, some recent price targets and upgrades for NIO's stock price, and after that, we're going to go over 3 important facts that anyone invested in NIO needs to know moving forward. For those of you who are new here, my name is Michael. I'm a 21-year-old entrepreneur, investor, and full-time college student. This past month, I made about $170,000 in one of the many investment accounts I share with you guys over on my Patreon. I let you guys know when I'm buying stocks, when I'm selling stocks with my personal account. So if you'd like to see more on what I'm investing in and stay up to date on my investments, well then make sure to check that out using the link down below. But anyways, let's get right into NIO. NIO has had an insane run in the last couple of months, and while some of the run-up was warranted, given the increasing demand for electric vehicles, especially out of China, and because the company has reported more than 100% year-over-year growth, the stock seems to be cooling off a bit now. And honestly, this makes sense. The run-up has been insane over the last couple of months, and while the EV market in China is currently the largest in the world, and its EV market alone is expected to be worth over $800 billion by 2027, the Chinese EV stocks that have risen up recently, NIO, XPeng, Li Auto, and all the others have to start proving themselves. They have reported great numbers recently. NIO has reported over 100% year-over-year growth. XPeng has done the same thing, and same with Li Auto. But now it's time they have to start really delivering big numbers moving forward like Tesla has done. Many people think that NIO has the potential to be the next Tesla, or be the Tesla of China. But the one thing to remember is that Tesla has consistently proven itself time and time again with its earnings report, consistently beating expectations. Nearly every single earnings report, Tesla has beat expectations significantly, and this is one of the many reasons why their valuation keeps going up and up. So at this point, while I do think NIO is a great long-term investment, I think they have potential to 3x in the next 2 years to $165 per share. It would be a smart move to hold off on investing any new capital into NIO stock until at least their next earnings report comes out. We did see a decent pullback recently of about 10% from the high of $57 per share. Now they're trading in the high 40s, but still we need to see some numbers come out from NIO to really prove themselves. If they are continually able to beat earnings expectations like Tesla has done in the past, well then I definitely see this stock reaching the $165 price target, no problem at all, because China's EV market is much bigger than the US EV market. The problem is though, is if they don't consistently beat numbers like Tesla did, then we could see an even bigger correction and a lot slower growth moving forward. So as of right now, NIO does have a number of good things going for them though, and there are 3 important things you need to remember. The first is that they are a Chinese-backed company that operates in China. So basically, the Chinese government could prevent them from failing. They could fund them, they could put restrictions into place for other companies, and that is really good for NIO. The second thing to keep in mind is that just last week, Bank of America and a number of other Wall Street firms increased their price target on NIO and XPeng dramatically. Bank of America more than doubled its price target on NIO from $23 a share to $54.70 per share, based on the company's potential market share gain, as well as its growth in overseas markets. This could be huge for NIO moving forward when they start moving into the overseas markets in Europe. And finally, the third thing to keep in mind is that NIO has the highest customer satisfaction out of almost all automakers. So those 3 reasons are great reasons why NIO can succeed in the long term and be the Tesla of China, or be even bigger than Tesla potentially, if they're able to capture more market share in China. But the one thing is we just have to be careful right now, see how their next couple of earnings reports do, and if they consistently beat expectations dramatically, we're seeing 100% year-over-year growth, well then I would say definitely invest in NIO long term. But if they don't consistently beat expectations, you're gonna have to be really careful with the company and what you're investing in, because they still are a speculative stock. So anyways, that's what's going on with NIO, some recent news on what's going on, as well as price target upgrades, and where I see it in the next couple of years. But I hope you guys enjoyed today's video. Don't forget to get your 2 free stocks valued up to $1,600 when you download the Webull investing app using the link down below. I hope you enjoyed, and I'll see you next time.